Hi, Bowler. Can you hear me?
I can hear you. How are you?
Okay, good. How are you?
I'm well equipped. I'm at my friend's place, and so my friend's girlfriend has all this equipment, so like lightning and everything else. So
Oh, it's
yeah,
beautiful.
yeah, I'm excited about this. Like I'm like surprised at how it works. In fact,
Yeah, yeah.
I think you should have one. I'll send you the picture. Even like it's so good.
What is so good?
The lightning.
Oh, the lighting. Yeah, it's very good. It's like studio
Yeah,
lighting.
we have a studio one. In fact, like I'll send you by WhatsApp. I had a conversation with the second session just recently before, so they all said.
Okay.
So we're gonna start by you. You're gonna open the Rotary Club of da. And then President Jared should join and have like 1 minute speech about the Rotary Club and the project. And then I'm gonna introduce the speakers and moderators. And that's it. And then stage is all theirs. And for Nouriel's questions, we need to choose questions from the audience. Like some, so would you do that?
It's fine. I can do it or you can do it, whatever you prefer.
Yeah, we can just discuss, even like chat between us, like which question we'll take, because
right.
something is not necessary.
Want to make sure, definitely no questions from Wendy, Patrick.
Oh, sorry, it's Nouriel. Hello, Nouriel.
You guys carry on. I'll just stay out of your way. You guys are doing the.
I'm kidding. I'm kidding. I'm kidding.
Yeah, Nouriel.
Thank you for putting on this program, Andreas. It looks terrific.
Yeah.
And this is such a great time of day for me to join your programs. I'll go to every evening program.
Information, so you can meeting numbers, because like it should be fine. Like we all there using the link.
Listen, Bolo, you know what, there could be an issue. I thought of that. Since he has not registered, maybe that is an issue.
Registered?
Huh?
Did you register? It's Nouriel, in fact.
No, I know, but I'm saying if Swift requires registration, then he may not be able to get in. I can send him the link though right now.
That registration, it's not like letting you in, since I'll send you the there is Eventbrite link. Let me send you, Nouriel. This is the
I send it to you right now. I'm already on, so I got to be quick. All right, I'll send it to you right now. Right. Use that link then, okay?
Are you in line with the Nouriel? Hold on a second, let me check.
No, I was on the line with Gerard because what is Nouriel's email again?
He's not able to join. I'm sending you Eventbrite, Nouriel. So you need to just register, it seems, but if you're not able to join through Zoom link, would you mind just registering on Eventbrite and join? Eventbrite, I just sent you the link. Yeah, email address, and then, yeah, but it's very interesting. Pardon me?
The same, Bowler, the same will be true for the other speaker as well. So you know that, right?
I'm sending them, yeah.
Okay.
So you just need to register through Eventbrite as usual. You register for events and then just go through the link. You receive email? Yeah, please. I sent you the Eventbrite link.
Hi, Gerard. You're on mute.
Thank you. I found it after all, so
Oh, okay. It was the longer link that you had to click on, right?
something like that.
Yeah, yeah. But no, because Nouriel, he has the same issue. He couldn't log in either. So.
I hope
And
I'll
also, Andreas, I do apologize. I just need to say, did you share? And you'll receive an email. Yeah. And Andreas, did you share the presentation that I sent you? The one pager?
I can do it right now.
Yeah, please, because if I was telling Andreas to share your and Vivian's information and connect and also like links for your Nouriel today and the Vivian's company as well as.
You see it now, Paula?
Looks nice.
Yeah.
So you registered and all set, or did you receive the email? Yeah, and then also you can, yeah, could you try through the Zoom link, please?
Hey there. Thank you for calling. Hold on one second.
Is that okay if I talk to Andrea some other things, logistics? Please let me know if there's anything. So in terms of all works. I'll forward you again the Zoom link. Just oh yeah, we see you now. Welcome, voila. Perfect. Okay.
You see me, hear me?
That's right. We see you and we hear you. Wonderful. Thank you so much.
So should I turn off the phone off now?
Oh yeah, absolutely.
Okay.
Bowler, the same may actually be true with Dr. Rigney. You know, it's also not registered just in case because.
Sent to the group everything, so they should be all set.
Okay, cool.
Yeah. While I was talking to Nouriel, I sent everything.
Okay.
How are you, Nouriel? Thank you so much for.
I'm good. Thank you. Just 1 second. Set myself up here so you can see me properly. 1 second. Okay. You see me? You see me okay?
Yes, we do see you well.
Is the angle and everything fine?
Yeah, everything is all set. So I had a call with
I can see
the.
myself, so I don't know if everything looks like
Oh,
Where should we?
it's just mine because I'm at my friend's place and then I have like very nice studio light. That's the main reason I look so good.
I also have a studio light, but I don't know if it's strong enough. Because I don't see myself, should I make the video farther away from me or is close enough?
Closer would be better, I think.
Closer?
Yeah, that would be better.
Even closer than this?
That's right.
How does it look now?
It looks great. So I'm gonna close my other distractions like WhatsApp, which yeah, you look great. Welcome, and please allow me to introduce our President, Mr. Gerard Scherfen, and our Executive Director, Andreas, and also our Rory member.
A pleasure meeting you all.
Pardon me?
A pleasure meeting everybody.
Absolutely. Thank you so much for joining us. It's a pleasure having you. It's an honor having you as our first speaker.
Yeah.
Mm-hmm.
The sound is fine. Do you hear me okay?
Yes, we do hear you very well. So you saw the agenda. So Andrea's gonna open the event. And then our President Gerard Scherfen gonna have 1 minute introduction about the project. And then I will give very brief introduction of all the speakers and moderators and audiences as well as, and then that's it.
Let's speak for 20 minutes and do a 10 minutes of Q&A. Okay.
Yes. In the beginning, I'm gonna mention the audiences type their questions that Andreas and I will screen for first part. And then for second part, the moderator is gonna screen the questions because I think that's fair for young professionals and entrepreneurs.
Mm-hmm.
Yeah, pretty much it is. So if you have other questions, please let me know. And also, we already shared the information of your Nouriel today.com on the screen. So those who are joining will look at the one pager. So, mm-hmm.
And when we do the Q&A, somebody's gonna submit me the question, right? The moderator?
That's right. So we, like Andreas will, and I will sum up the questions and then we'll ask the question from you. Because it will be a waste of time if someone is just joining video, like they like talk about themselves. And so we just wanna avoid this situation.
Of course. Sounds good.
Well, Bowler, how long would you like that screen shared here?
Until 7 p.m. Because
Okay.
Are you allowing people to get in?
Yeah, I mean, people are coming in as we speak, so.
Oh, okay. Could you just allow them to join?
Yeah, you see, the thing is, I can, 1 second, let me see.
Well, it's better to
No, there's nobody there, but there's nobody that is not coming in right now. So everybody's coming in.
7 around, right?
It is 7 o'clock.
Oh, wow. So that's interesting. We do have how many registrants as of now so far?
We were at 60 and we have currently 20 on the call.
Okay.
But nobody's in a waiting room, if that is your question.
Mm-hmm. Oh, hi, Vivian.
Andreas, why don't we wait about 2 minutes and then we can begin?
Yeah, I think so too. Yeah.
Thanks.
I think we should just begin. What do you say, Gerard?
That's right.
Yeah, okay. Anyway, I wish to welcome everybody to today's Rotary Club of New York, Club number 6 Zoom meeting. It is the first youth empowerment session. It has been put together very graciously with our member Boller Tumuchuro Dene and in collaboration with Global Shapers Community New York. We are very much delighted to have some very high-level presenters here this evening. They have international recognition, and we are truly, truly honored and humbled to have Dr. Nouriel Roubini here. He will be talking to us in the first part about the US global economic outlook. And the second part will be handled by Dr. Vivian James Rigney, who will tell us everything about hacking peak performance. We don't want to lose too much time on my initial remarks. Just a few rules. Please keep yourself unmuted until we go into a discussion setting. We don't want to interrupt our presenters. Again, we are the Rotary Club number 6. That means we are the 6th oldest club in the world. And we have been founded in 1909. With that said, I would like to introduce to you our esteemed president, Judge Gerard Schriffen, and he will be welcoming you as well. Thank you, Gerard.
Thank you, Andreas, and good evening, everyone. My name is Gerard Schriffen, and as Andreas said, I'm the newly elected president of Rotary Club of New York. My honor to do so. And we welcome you tonight to the first of a monthly series that we have begun for everyone, really, dealing with the youth empowerment, but in fact, an empowerment session for everyone. This morning's New York Times on the front page had a leading story about New Yorkers facing a very frightening future in the fall because of COVID-19. We all know what's been happening. We heard this week on August 31st, the city of New York expects to lay off over 20,000 workers. American Airlines yesterday announced they were laying off 31,000 workers, and we're probably not going to get much kind of federal relief for the state of New York because of the presidential elections. We know that approximately 500,000 people have left New York City. 40% of our restaurants are closed. Crime has gone up. So the issue is, how do we deal with this? Yesterday, New York State Senator Liz Kruger, who is the state senator from the east side of Manhattan, wrote, "We're getting closer and closer to the everything blows up moment." Well, we've been through plenty of things like this in the past. Maybe not exactly the same, not quite the same, but stressful nonetheless. And we are New Yorkers. And as New Yorkers, we realize, as the song goes, if you can make it here, you can make it anywhere. And it's really very vital for all of us to take control of our own lives, and our future literally is up to us. And that tonight is the focus of this series that we're beginning. Every week, Rotary Club of New York will have a new broadcast. We have our monthly breakfast in the United Nations. We invite everyone to that. That's the third Wednesday of every week. And now tonight, we're inaugurating a new series dealing with youth empowerment. And we have some really very exciting people who are going to address us tonight. And I look forward to it. And if anyone wishes to contact us, please do. It's New York NY Rotary, nyrotary.org. You can reach us anytime. And with that, let me introduce the chairperson of our membership committee, Boller Tumuchuro, who will introduce our guest speakers. Boller?
Thank you so much, President Gerard. I really appreciate everyone for taking your time joining our first monthly session. I'm going to be very brief. So we are honored and humbled to have our one of the leading and top global thinkers to the date as our first guest speaker. Dr. Nouriel was one of the very few economists that predicted 2008 recession, and he is a chairman of Roubini Macro Associates, an economic consultancy firm, and teaches at the NYU Stern Business School. And you can get daily updates through nourieltoday.com. And second part is Hacking Peak Performance by Dr. Rigney. And he's a seasoned telecommunication executive and runs a Inside Us executive coaching firm. And he has been coaching Fortune 500 executives over the past 15 years. And we are excited about, moderated by our very dear friends from Global Shapers New York Hub, Nouriel Yo. And Nouriel is the CEO and founder of the 1.5 and virtual advisory marketplace for sustainability experts. And Kaya Kailin, Aknes Erbi, the ESG Impact Advisor for Private Equity. We are delighted to have those bright rising stars as well as. And there would be like, Nouriel will start his speech for 20 minutes and then we have 10 minutes Q&A, same format for the second part. So feel free to write down your questions and we're gonna screen it and ask behalf of you. Thank you so much. Stage is yours, Nouriel. Thank you so much for joining.
Thank you very much. It's really a great pleasure and honor to be speaking in front of such a distinguished club, the Rotary Club of New York. I'll try to be brief. I have only 20 minutes to give you an outlook about the US, the global economy, and also the markets. And I've been living in New York for the last 25 years since I joined the faculty at New York University. I've been here for the last 6 months, not going anywhere, being here through the COVID, to the spike, to the demonstrations, to even the looting. This is my city. I believe in New York, and I believe also we're going to be able together to resolve this problem. But we have many severe challenges ahead. Now, what about this COVID recession? There are some bad news and there are some maybe better news. The bad news, this has been the worst economic recession in the last literally almost 100 years since the Great Depression. This was more severe than the global financial crisis. And it was more severe because it was driven by essentially a policy-induced coma. Since there was a surge of the spread of the contagion, government everywhere from China, Asia, Europe, and then US had to completely shut down and lock down economic activity for several months as a way of flattening the curve and avoiding even more people dying. So that implied that we had a free fall of the global economy. The good news is that this was also the shortest recession we've had. US typical recession lasted at least a year, while this recession lasted globally about 4 months, February, March, April, and May. And from June, we had the beginning of a recovery, however difficult, of economic activity. What explains the short recession, the recovery? Once we controlled and flattened the curve, we reopen economic activity, even if we, in some places around the world, we reopen it too soon and now there is another wave, and that's a problem, like in the US Sun Belt. And secondly, we had a massive policy stimulus, massive monetary policy stimulus, massive fiscal stimulus, massive credit easing, massive help by government to try to support households and firms that were illiquid but solvent. And the combination of reopening economic activity and having that massive policy stimulus is starting to have a beginning of an economic recovery. Now there is a big debate on whether the recovery is going to be robust, like a V. We went down and then sharp return to strong growth, or whether it's going to be more anemic, like a U, or whether there is even a risk of a W, a double dip recession, if, for example, during the winter, there will be a second wave, we don't have a vaccine, and then we have to shut down things. Markets are expecting a V-shaped recovery, but I'm more skeptic and I'm more cautious. I worry there's going to be a hard slog when the unemployment rate is going to remain above 10% for quite a while, and the economic pain is going to continue for a while. Now, for a quarter, in the third quarter, we might see something looks like a V, only because there was such a free fall in the first and the second quarter that once you start having economic activity up, say even 4% growth within the quarter, at the annual rate becomes 16%, or 5% recovery in one quarter at the annualized rate, as the way we measure it looks like 20%. But don't be deceived. First of all, Those numbers are annualized. And what matters is not the third quarter, but rather the fourth quarter into next year. And why I'm cautious, why I think the recovery is going to be anemic and painful. The reality is that before the crisis, many corporations in the US around the world were highly indebted. We had CLOs, we had leveraged loans, we had high yield debt, we had fallen angel, we have high grade, trillions of dollars of debt. And many of these corporations need now to survive and thrive given the shock that occurred to their demand and the production and their sales. How they're going to survive? They have to spend less and they have to save more and they have to do less capital spending because, of course, there is a huge amount of excess capacity. But how you save more and spend less? The main cost of every firm is labor cost. And they've been firing like crazy, especially in the United States, but also in many other parts of the world. 30 million people lost their jobs in a matter of months. And even if and when firms are going to start to rehire again, they're not going to rehire jobs that are permanent, jobs that have high wages, jobs that are benefit. They will do what they did after the global financial crisis. It will be temporary jobs, part-time jobs, hourly jobs, contractors, gig workers, freelancers, and so on. So what's going to happen is that there'll be uncertainty about labor income. Many people are not going to regain their jobs, but even those who are going to regain their jobs will have less income, less benefit, and more uncertainty. And they'll have to save more. So that type of uncertainty implies that not only the corporate sector is going to spend less and save more and do less capital spending, but even households that are shell-shocked with so many people jobless, skillless, hopeless, incomeless, full of debt, with little assets, will have to be more cautious, more risk-averse, spend less. And the savings rates in the US has gone from 8% to over 20%. Many people are unemployed. They cannot pay their rent. They cannot pay their utilities. They cannot pay their phone or their internet. Luckily for now, there is an eviction kind of freeze, and people are not going to lose their phone service or internet if they don't pay their bill. But there is a tsunami coming, a tsunami because eventually those freezing of eviction and things like this is going to be phasing out. Millions of people are going to risk losing their homes. Millions of small businesses may shut down. So many restaurants, so many retail stores, so many businesses cannot survive. And even many of the big businesses that were highly leveraged are going to default and fire on their workers. And of course, in the sectors that are not recovering, like hospitality, like travel, transportation, bar, entertainment, people are going to have to start to do not just temporary layoff, but many of these temporary layoffs are going to become permanent. And as people are going to default, houses are going to default, small businesses are going to default, businesses are going to go bankrupt, the banks are going to have losses, non-performing loans, and then they're going to become more cautious in extending credit. And you could have a credit crunch. So now people say the markets are doing well. They're now at an all-time high. But I think that the reality is that what is good for Wall Street is not good for Main Street. Why? What is Wall Street? Wall Street is big firm, big tech, big banks, and big financial institution. What is Main Street? Main Street is workers, is households, and small and medium-sized enterprises. So millions of small enterprises, retail stores, and other are going out of business, but of course the market share of the big businesses is rising. You know, Amazon is becoming bigger and bigger top retailers, but so many retailers are going away. But for every job created by Amazon, there are 10 jobs lost in the retail sector. So the stock market goes higher, but Main Street small businesses are disappearing, and half of US jobs are created by small businesses. And the same thing for workers. Firms may show better profit because they're cutting their costs. But what are their costs? Their labor costs. And your labor cost is my labor income, and my labor income is my ability to consume and spend. And therefore, workers are squeezed, small businesses are squeezed, and instead big firm, big tech, big banks are doing well. So the fact that the stock market is reaching new high doesn't mean much, because what's good for Wall Street is not necessarily good for Main Street. Now, on the positive side, as I pointed out, we had a massive stimulus. Monetary policy stimulating like never before. Budget deficits of 10% of GDP or more. Credit easing and providing credit to illiquid but solvent firms and households. However, we have some risks. Risk number one is that there is a stalemate right now in Congress. We don't know whether this new stimulus, and we need at least $1 trillion, possibly $2 trillion, to give to workers, to small businesses, to state and local government, whether there is going to be an agreement. And Democrats and Republicans don't seem to be reaching an agreement. So there's a fiscal cliff that's going to be a drag on growth. Two, at some point, even if we have zero policy rates, how much can we stimulate the economy with zero policy rates? Yes, the stock market goes higher, but Main Street doesn't necessarily benefit. And there is the beginning of a credit crunch, as many people are at risk of defaulting. Additionally, we're building up a huge amount of debt, public and private debt, that's going to become higher and higher. What's the exit strategy from exiting from this huge buildup of private and public debt? What is the exit strategy for the Fed from exiting from this very aggressive monetary policy? Now, in the short run, people worry about the deflation because there is not enough demand. There is a slack in the goods market, slack in labor markets, slack in real estate, slack in commodities, and we have deflationary pressure. But my worry is that when we monetize large fiscal deficits, eventually, not this year or next, but by 2022, we may back into inflation, or what people refer to as stagflation, like it happened in the 70s when we had major oil shock, we had easy monetary and fiscal policy, and inflation expectation got out of hand. Now, what are the negative supply shock that would cause stagflation, recession, and inflation 2 years from now when we have very easy monetary and fiscal policy? There are two negative shocks. One is deglobalization. Everybody's trying to protect their firms and workers. So we have deglobalization, we have protectionism, we have trade restriction, we have reshoring of economic activity, we have decoupling between US and China, we have fragmentation of the global economy, we have balkanization of global supply chains. All is going to imply less productivity and higher cost of production. Second thing is going to happen is that we have this Cold War between US and China that is becoming colder on every dimension, from technology to trade to finance to currency arrangements to pretty much investment and everything. And one of the forces was keeping inflation low was technological innovation. But think of it this way. Suppose that for national security reason, we decide not to use the 5G of Huawei, the Chinese, because we're worried about a backdoor to the Chinese government. Then we have to use the Nokia or Ericsson that costs 30% more and is 20% less efficient. So to build the same 5G network, we're going to have to pay 50% more. That's another negative supply shock. Now, in the 70s, when we had negative supply shock like oil, Yom Kippur, and then the Iranian Revolution, we monetized and printed money, we ended up with inflation and recession. 2 years from now, given deglobalization and a Cold War with China, the risk is going to be we'll end up again with stagflation if we have this massive monetary easing and fiscal easing. So that's a meaningful risk that is not in the short run, but over time. Couple of other things that can go positive or negative. There has been a spread of the contagion. In US, to the Sun Belt and Midwest because we reopened too soon. Even in Europe, Spain, Greece, Germany, from low level. In Australia and Japan, where now in the southern hemisphere it's colder weather. In many emerging markets like India, Brazil, Latin America, Russia, part of Africa. There are two views. One view says we have to have another full lockdown for a month or two, absolutely, to crack down on the spread of the contagion. Otherwise, by the winter, when there is a second wave, it's going to be a disaster. The other view says, no, the economic cost is too high and we have to do something milder, like social isolation and distancing, using more masks, avoiding indoor activity, testing, tracing, as a way of gradually reducing the thing. We don't know which one of these two strategies is going to work, but politically today, there's no appetite in US or other parts of the world for another full lockdown because the economic costs are very huge. But we're taking also a risk by not cracking down as much that if there is a second wave, then we may end up into another disaster, into a double dip recession. What's the outlook for vaccines? Maybe here there are some good news. And the good news is that there are at least 6 candidate vaccines that today are in phase 3. So if you are lucky, and if politics doesn't interfere, maybe by November or December, we're going to announce 1 or 2 of those vaccines. Then we can start producing them very rapidly in the US, in other parts of the world. And if most people get vaccinated in the first half of next year, then the recovery of economic activity could be stronger. But there are 2 risks. Risk number 1 is politics might push us to announce a vaccine before it's safe and effective. Russia did it. And of course, President Trump wants to announce a vaccine before November 3, the election, because he's behind in the poll. If you roll out a vaccine when it's not safe and effective, it could be actually a disaster. Second thing is that maybe we're not going to be able to have a vaccine ready by the end of the year. If it's ready only by, say, first or second quarter of next year, by the fall and winter, we'll have a second wave without a vaccine. Many more people are going to get infected. Many more people are going to die. And we may have to slow down again economic activity. And a V in the third quarter may become an anemic U in the fourth quarter, and may become even a double dip recession in the first half of next year. In the US, there are also 4 finally political risks that we have to worry about. First risk we face today in the next few months is this risk of a fiscal cliff if the Democrats and Republicans do not reach an agreement on a 4th fiscal package of at least $1 trillion, possible $1.5 trillion that we need because most people are suffering. Secondly, intelligence sources suggest that foreign powers, Russia, China, North Korea, Iran want to interfere with US election to create noise, political chaos, and undermine US from within. We already are not having a lot of bipartisanship. The least we can afford is having foreign powers trying to create chaos. 3, we don't even know whether we'll know who's going to be the president, either Trump or Joe Biden, on election night, because the poll may narrow. Trump is trying to undermine the election by saying that mail-in votes are not going to be fair and doing other activities so that election night he can say it was rigged. And we may be in a stalemate where we don't know who has won. And then it can go to court for weeks or months, or even you could have civil unrest with people on both sides going in the street and starting to shoot each other. This is going to be a very, very, very ugly election. And we may not even know the results, and that's going to create market noise. Final point, if Joe Biden is elected and there is a sweep by Democrats winning also the Senate, so far that's what the polls say, but of course the results could be different. Some people worry that the stock market is going to go down because he already had said, I want to raise taxes on corporates, on the rich, and on capital gains. That might have a negative impact on stock but there are other policy of Biden that may help actually the economy and the stock market. He has a bunch of pro-growth policies, like spending more on infrastructure, spending more on a Green Deal, on improving the environment, increasing labor income, protecting essential workers, strengthening the union so there is more labor income and consumption. His fiscal policy will be more proactive, more stimulus. There'll be less trade wars, less geopolitical friction, and less noise coming from Twitter. So as long as he has mainstream, even if slightly more progressive policies, I think that the market concerns that the stock market is going to crash if he's elected are wrong. And the fact that it's still ahead in the polls and the stock market is going to higher high suggests that actually a solid mainstream democratic administration could be good for the economy, could be good also for the markets. And I'll stop here. Thank you.
Okay, thank you, Dr. Roubini. That was fantastic and gave us quite an insight already of what's going on. We're going to start with some questions, and we go a little bit by order here since they are all quality questions. The first one comes from our longtime member, Larry Parks, who is the chair of the Monetary Foundation. And he's asking basically, what is your view about the stated official policy of targeting average inflation? This policy includes, according to Federal Reserve Chairman Powell, keeping interest rates near zero for the foreseeable future. How will this impact pension funds, which are already underfunded? Will the dollar survive as the world's reserve currency?
Well, it's likely that during his speech at Jackson Hole, Chairman Powell, following the review that lasted a year of Fed inflation target, is going to move the inflation target slightly. And the changes until now, the US said our target is 2%, while now we may move to a flexible average inflation targeting. That means that if during a recession, as is now, inflation is well below 2%, then when we are at full employment, we're going to allow for a while inflation to be slightly above 2%, between 2 and 2.5%, as a way of essentially making sure that on average you have 2% inflation. Because his worry is that if we're not going to do that, then inflation expectations are going to be the anchor to the downside, and then we'll never achieve the 2% target, and then there is a risk of deflation. That's the argument for it, and to some extent makes sense. Now, your questioner makes a valid point, and valid point is that if policy is going to be that we're going to stay at zero policy rates until we reach full employment, and even after we reach full employment, we're going to keep them at zero until inflation is closer to 2.5 rather than 2, it's possible that zero policy rates are going to stay with us until at least 2025 or even 2026. And futures market right now expect that the Fed is going to stay at zero, the current level, until then. Now, if you do that, you can help maybe the economy. You're going to have probably a rally, if not a bubble, in risky assets, but bond yields and 10-year treasury yields today are at around 0.60 or to 0.70, depending on the day. They would stay very low at those levels. And that's a problem for all old people that either directly save in bonds, or for all those pension funds that have to have targets for returns that are more 4 to 7%. If you're earning barely 60 basis points on bonds and 60% of your portfolio is bonds, you never get those returns. What's going to happen is that many of these pension funds will have to go to more risky stuff like equity, like credit, emerging markets that could give you a high return, but if there's going to be another market downturn, is highly risky. So unfortunately, we have a situation in which the policy of the Fed is hurting creditors and is hurting savers. But then people say if the Fed moves out of zero policy rates too soon, the economy is going to crash, and then the stock market is going to crash, and the bond market is going to crash. That's why it's a tough dilemma. Of course, this easy policy by the Fed is leading the dollar to weaken. I would say some of that dollar weakness is necessary. The dollar had appreciated too much, was overvalued. We have a very large trade deficit. So as long as the fall of the dollar is gradual, it's going to be good for profits, it's going to be good for trade, it's good for economy. Of course, if we have very aggressive monetary policy and we debase the currency and we end up in inflation, then you could have a free fall of the dollar, and the rise in inflation expectation in gold prices is already signaling that some investor worry about the debasement of fiat currency. But the point about the dollar losing its role as a global reserve currency, the problem is, what's the alternative? So far, there is no alternative to the dollar. Cannot be the euro, cannot be the yen. And we're not going to go back to the gold standard. I'm sure it's not going to be cryptocurrencies. So people fear malaise about the dollar, and the dollar can go down, but would it lose its role as a reserve currency when there is no alternative? That may take decades.
Thank you so much, Dr. Roubini. The next question is actually from our president, Gerard, and we're doing this just a slight bit different this time in order to save time and streamline. But President Gerard is asking, since savings are greatly increasing, won't that make it more difficult for an economic recovery? How shall we address this?
Well, we have to think of it this way. The corporate sector, because it was leveraged, has to spend less and save more. The household sector that is worried about jobs and income has taken some of that stimulus and has saved it, and the savings rate has gone from 8 to 20%. So in a world in which the private sector spends less, saves more, and does less capital spending, firms are gonna do less capex, households are gonna buy less new home because they're worried about jobs in the future. In order to prevent another slump, the other agent in the economy, that is the government, has to, instead of saving, has to dissave, has to run a budget deficit, and has to transfer money, to transfer payments and income and lower taxes to the private sector. And the public sector has to invest more because the private sector is doing less capital spending and investment. So to balance the higher savings of the private sector and the less capital spending, the public sector has to do more capital spending and more public investment that we need because our infrastructure are crumbling, and as on a temporary basis, they save and transfer money and run larger budget deficit. Otherwise, we end up into a deeper recession. Now, the savings of the public sector is happening. We don't yet have a public investment program. Donald Trump talked about it for the last 3.5 years. He didn't do it. We need it. Airport, roads, telecommunication, green economy, stuff that increases actually the productivity of the private sector because public capital is complementary with private. Hopefully, regardless of who is going to be elected, we may get an infrastructure plan. Certainly, that's one of the key elements of Joe Biden's economic program. He says we need it, and it's labor intensive, and we're going to also create many jobs. So let's hope that happens.
Okay, thank you again. We have a question from Tyler Bauer. He's asking, it sounds like capital intensive industries like IT, which are location independent, have received heightened attention during COVID. How do you think the conversation on macroeconomic policy might change and become more globally based as the IT industry continues to grow?
Well, you know, the IT industry is both national and is also global. My fear is that because of the rising Cold War between US and China, there will be a balkanization of global supply chain. It's going to be a decoupling between US and China, especially in technology. So we'll have different 5Gs in the West and in China, different internet, different AI systems, different robotic, different automation, different systems of telecommunication. There'll be some reshoring of economic activity from China to the US. So that decoupling is like a negative supply shock. Now, some people say it may be good news because we're gonna reshore economic activity to the West and the United States. But as your questioner pointed out, many of these firms are very capital intensive. And therefore, if the cost of production in the US are much higher than China, as we move manufacturing and tech sector from the US and China, we're not going to hire many workers because the new factories of the future, whether for technology or manufacturing, are going to be very capital intensive. You know, the factory of the future is going to be 1,000 robots, a couple of people manning those robots, and one other person sweeping the floor and cleaning up. And even that third person is going to be most likely replaced by a Roomba robot that can work 24/7, doesn't have bathroom breaks, and doesn't take vacation. So one of the challenges we're facing is that with AI, robotic, and automation, there is a threat to essentially the future of work and job. And therefore, even reshoring and balkanization may not create that many jobs. What we have to do is to invest in our people. We have to make sure that people can survive and thrive in a globalized and digitalized and automated global economy, and have the skill, retraining, and education, and learning STEM, science, technology, engineering, math, computer science, so that young people and even older people can survive the process of automation. We have to invest in our people. We have to invest into physical capital, into infrastructure capital, but most important, into human capital, in workers and our people. Otherwise, we're going to be left behind.
Thank you, Dr. Roubini. Most interesting. We for the respect for our second presenter, we're going to go to one more question. That question comes from Zach Rawlings. Dr. Roubini, you were one of a few that foretold the recession credit bubbles of 2008. Do you see any similar bubbles today, and where are they?
Well, we are in a severe recession, and now there is a recovery. And what has happened is that the stock market in the US, after falling 35% in February, March, now has gone up 50%. It's few percentage points above the high that it had, you know, in February. And of course, the NASDAQ is more than 20%. Now, I don't want to call it a bubble. And it's true that even if you have, if you're in a situation which you have zero policy rates and 10-year treasuries are at 0.6%, price earning ratio can be higher than before. The trouble is that I think the markets are expecting earnings to be higher than going to be. At the beginning of the year, they expected to be 170 for the earnings per share of S&P 500. Then they revised them down because of the recession to 135 minus 20, but they expect them to be back to 170 by the end of the year. Given the amount of economic disruption, I think that earnings are going to fall from 170 to 120, and next year they're going to be 140. So I think the market is mispricing for two reasons. One, their expectation for earnings are too optimistic, and over the next few quarters we'll realize that many firms are not that profitable, and therefore the market is too high. Two, liquidity can lift valuation above fundamentals for a while, but it cannot lift them forever. And eventually the forces of gravity of weak economic activity, high unemployment rates, low labor income, low consumption, low earnings are going to imply something of a correction. So for now, it's liquidity is driving the markets higher. I don't call it a full bubble, but it's frothy. Yes, some indices are overweight in the technology of the future, like tech, communication, bio, healthcare, and so on, S&P and NASDAQ, but we're reaching levels that are frothy. And therefore, compared to March, there is a risk of a correction, given also the various risks out there.
Thank you so much, Dr. Roubini. We could probably listen to you for several more hours, but like I said, for the respect of our second presenter, who I just learned is actually joining us from Ireland, and it is way past bedtime there. So Dr. Rigney, thank you so much for joining and waiting patiently. And thanks again, Dr. Roubini. We appreciated that so much.
Thanks.
Thank you so much, Dr. Roubini and the Rotary Club of New York. My name is Neil again from the Global Shapers Hub. Just a reminder, I think with timing, correct me if I'm wrong, Bilal, but we have extra 10 to 15 minutes after the hour, just in case there are additional questions or you want to hang around. And do send your questions through on the chat, and Kaya and myself will moderate those. There's no easy way going from macroeconomics into hacking peak performance, but I think I have something that might help. I guess during this difficult time, not only has it been difficult for business and societal leaders like these people on this call to maintain optimism, but also peak performance. Can you share with the group about how you got into coaching and the advice you have to leaders about how to hack peak performance?
Hi. So yeah, my Irish accent is probably a little bit stronger because I'm in Dublin here in quarantine to see my family for in a couple of weeks' time. But I was in South Africa. I was 25 years old. I was working for a US company out in Munich. They promoted me, then moved me to Johannesburg. I was there it was a big job for me, way bigger than I was probably ready for at the time. And I went down there and I was working with our partners, our distributors. And after 6 months, I was failing. So I was working with these people. I was finding it hard to connect with them. I was finding it hard to engage with them. And for the first time in my life, what I've been working up to that point was no longer clicking. Up to that point, I was working hard. The harder I worked, I got rewarded. Again, hard work equals reward. And it was almost like an invisible barrier that I hit there, where hard work was no longer giving me a benefit. And I was incredibly scared at the time. I found it hard to tell my boss that I was finding it difficult. I was finding it hard to tell my family because they'd be worried about me. So I internalized everything. So I kept digging this hole of work hard, work hard, work hard. What I didn't understand was I was in South Africa 6 months. It was during a period of transition when President Mandela was there. There was a lot of change in the country, political change. These were people who were actually terrified of change, terrified of everything that was happening in the country. They were unsure about the future. They'd been privileged in the past. And for me, I was coming in with a lot of optimism, a lot of bright eyes, all of what's possible. And it was a big issue for me in realizing that at that time, I didn't have a recipe and I was unable to ask for help. And after 6 months of a lot of pain, I had a discussion with my boss, and he said, I was waiting for you to tell me that it was difficult. And that was a huge aha moment for me. And I realized at that point in time, the only choice I had was to vocalize my situation, be authentic with where I was, ask for help, tell people I didn't have the answer. The moment I did that, people engaged with me, and this huge burden was relieved off my shoulders. 15 years after that, I was managing a software company in Helsinki in Finland, as you do, and there was the dot-com bubble was popping and things were changing, and I realized I needed to make a career change. I read this article in a magazine. The article was about executive coaching, about helping people to help themselves. And for me, it was a big awakening of where was that coach back in South Africa when I was on my own. I was incredibly lonely. I felt I had no one to talk to. I had to carry it all inside. I had to figure it out on my own two shoulders. And if I had a coach, that would have been a profound way of talking to an independent, honest broker, as it were. So that was my entree into coaching. I was wildly curious if people made money from this. There's a living to be made out of it. I could work with stimulating, interesting people. And that was 2004. So I've been doing this for 16 years, 3 years in Helsinki, and then moved to the United States in 2007. So I've been here 13 years.
Awesome. And I feel, I mean, you mentioned the first step really being, asking for help and getting outside of yourself in terms of that being what unlocked next steps for you. But when it comes to, tactically really thinking about how to achieve peak performance and then also make that something that's sustainable long-term, from a strategic perspective or tactical, what sort of mindsets or practices are you guiding your clients through to achieve that?
Right. Well, the people I work with are primarily senior executives. They're all leaders, people with, 15, 20, 30 years experience. They're all very accomplished, very polished, experienced. And that's the brand that they have. Whereas back in reality, when I meet with them, I find that they are lonely. They are they carry a lot of responsibility on their shoulders. They have a lot of things they carry for themselves. They're very nervous about sharing their vulnerabilities with people. A lot of people listen to their every word. So in a way, they're carrying all this in their head, and they're trying to multitask, and they're trying to be aware of what's happening around them. So there's a lot of noise in their head. So peak performance is really with these folks, for all of us. But certainly at this level, you can imagine the stakes are so high when they've hundreds of thousands of people working for them, is to reduce the noise level in their own head, reduce the noise level of their own inner dialogue. And that takes a couple of different forms. It could be that their ego is too high, so they're quite inflated with themselves. A lot of I, a lot of me. They have to carry the burden, and they have to, carry all their responsibilities. And that could be an issue for them because they're blind to what's happening around them. It could be their persona, where they're trying to put an image out there about how they want people to be seen, and they're too focused on what people think of them. Think of politicians. This is a really important, a really interesting way to see how that translates into votes. But as executives, and again, they are being judged all the time. People who work for them, people who they work for, and the board is involved. So as an executive, how do you get out of your own way and being too caught up with, who you are and how you think and how you behave and your experience? And how do you avoid getting too caught up with the audience and how they judge you, and how you're consciously thinking too much about how they judge you? The only way one can do that is by having honesty with yourself and cutting out this noise level in our mind. If you look at athletes, for example, they're in the Olympic stadiums. Their sole purpose is to empty the noise out of their minds and allow their body to perform to the best of its ability. We've mapped it over to corporate world. Whether you're a young corporate guy or gal coming into corporate, or you're seasoned executive, same premise. How do you reduce the noise in your mind so you can be aware of what's going on with your own intuition, what's going on around you, but not to the extent that you're over concerned about it? And this is where getting people to be much more curious about how they think, but also how to balance that with what's happening around them is a distinct focus on peak performance for a lot of the folks I work with. Again, the loneliness promotes all these stories they carry in their heads about how they should be, how they think they are, how they believe they are. And a lot of it is nonsense. A lot of it is a lot of wasted energy and overthinking and overcooking things. So we reduce that noise. We help them to be more aware of themselves, more honest themselves, more smart in how they see, interact, and communicate with others. And you find that balance comes back. And with that balance comes something called authenticity. And when you're authentic, you can be honest to yourself. When you're honest to yourself, other people will breathe that in and realize that what you're saying is meaningful. It's coming from the heart. There's an honest truth that comes with that. And that has a significant impact on what they're trying to do and the impact they're trying to have. And how do you sustain that? It goes back to that circle of authenticity. You've got to be honest to yourself. You've got to clear the noise from your mind. And that translates to sustainability, which allows peak performance to be realized and for it to, but it's work every day. There's no free lunch on this. A work in progress, as all of us are, I'd imagine we'd agree with.
Dr. Rigney, you climbed Asia's Mount Everest, and that sounds to me like the trials and tribulations that could almost mimic a COVID crisis. Can you speak us through how you as an adventurer climbing that mountain with all the trials and tribulations, what you learned about performing even when your life may be at danger or livelihood of your job and all these things that we're currently facing during COVID?
Right, thank you. First, a correction, I'm not a doctor, so I'm just Vivian James Rigney. Everest for me was, again, it connects a little bit with South Africa. I was always grew up in a family, very strong, high achieving family. And with that, there was probably a bit of baggage I picked over the years. So that's one of the reasons I left Ireland. One of the reasons I want to leave my family environment. You know, plow my own furrow. It's a very Irish story to leave the island and go somewhere else. And I travel all over the world. I did great things, but I was always driven. And I got into mountains while I lived in South Africa. I heard about the 7 summits, the highest peak on each of the world's 7 continents. And I thought I'd have a crack at it. Never thought I'd do 7, thought I'd do 6. Everest was for the crazy people with lots of experience. I ended up doing 6 of them. And then, like an itch, I guess I couldn't quite scratch. Or I wanted to scratch, but couldn't reach. The question was, is it the mountain or is it me that stops me from climbing Everest? I've done these other things. I have experience, obviously not Everest experience, but I've accumulated quite a lot. And the answer was, I didn't really have the answer. And I said, well, that's the answer, meaning if it was me, if it was the mountain, it would be the mountain, but I think it's more me. So I committed to it. I did a stupid thing. I met a guy who was organizing an expedition, and I signed up and I went to Everest. And what I found on Everest was that I was very fit. I was very focused on, getting up on time every day and helping the team and doing all that good stuff. But I found the higher and higher I went up in the mountain, all this hump and push of, I can do it, push yourself, all that was all the ego. And the ego was saying, you can do it, believe in yourself, you've done this before, you're fine. The higher you go up and you face these constant challenges of weather, of situations, of physical challenge, of how your body's feeling. I was always terrified of heights. I had to overcome that. Every mountain I climbed, I got to overcome that. You have this perfect storm of things which basically poked holes in this ego of just do it, just do it, just do it. And I was left on summit day at the false summit of Everest where you come across a knife edge, and in front of you, you have Hillary Step. When I realized, when I kind of broke down, and I stopped and I looked at our guide who was leaning over a rock who was vomiting and saying, I don't think I could do it. He'd summited 4 times. And I immediately shut down, and I felt had no energy. I hadn't had enough oxygen, all this stuff. My mind just started to unravel, as it were. And I started to close my eyes, and I started to cry. And I realized at that point that maybe I was going to, this is where I was going to, end. My life would end at this point, the south summit of Everest. I would lean against a rock and I would die, and I would be there for posterity. That's how I was viewing, this is my legacy. And I felt an incredible sadness that this is the way I was going to go. Because the one question that came into my mind, it was almost like a dark cloud that came all the way down and wrapped itself around my head. And this voice came from deep within me, and it said, why are you here? And it said again, why are you here? And then it said, why are you always proving how good you are, how competitive you are, how successful you are, what a good son you are, how accomplished you are. All these questions kept coming. I'd never experienced a feeling like this. It's almost like I felt naked. The ego was of no use to me. Persona was irrelevant. Any thoughts I had were irrelevant. There was this incredible feeling of vulnerability that I've never experienced since. And it was, why are you here? And the answer to that question was, I don't know why I'm here. I don't know. I've always had goals, and this is a goal. And the thought there was, I'm going to, fall unconscious, and this is where I will lay. And my legacy is not knowing why I'm here. And the rest of the people down, my family and people significant, are down there. They think they know why I'm here, but they don't really know, because I know I don't know. And I closed my eyes for a few moments and went away somewhere, because I felt this. It was almost like a pain of my legacy. This was it. And I was very upset, and I just emptied my mind, and I thought of somebody. I lost my brother 20 years ago, and I thought of him. The minute I thought of him, all the thoughts went away. And then I got a tap on my shoulder after maybe, I don't know, a few minutes. It felt like half an hour, but it's probably a few minutes, of my Sherpa. And he grabbed me, he pulled his face in towards his, and he said, we must go. We stay, we die, we must go. And I looked at him and I said, you know, I didn't say anything. I was just speechless. He said, "Follow me." And I followed him. And I put my boot where he put his boot was. I thought he was taking me down the mountain. I have no recollection of going over the knife edge. I remember almost coming to halfway up Hillary Step. I'm going, son of a gun, he's taking me to the summit of Everest. I vaguely remember going up Hillary Step. I was totally empty. We got to the top of Everest, and I remember standing there thinking, I'm here. It's nice to be here. It's amazing to be here. I don't know why I'm here. So it was a profound experience of my learning about the imposter syndrome, which for me was trying to always prove that I was this and I could do that and I could push boundaries and I could do everything. And I guess when I came down the mountain, luckily I'm here. I said that, yeah, I promised myself that no more doing stuff without knowing why I'm doing it. No more doing stuff in the eyes of others where I thought that would have impact. More honesty to myself. So that's a long-winded answer to your question.
I really appreciate that, and you tying in kind of imposter syndrome, because that was definitely what I was thinking about as you were telling the story. You know, metaphor of Everest and that being, you know, our careers, and probably constantly asking ourselves, should I be here? Am I ready to be here? And then obviously, why am I here? Which is probably the most important one and the one to focus on. But I really appreciate that. That's useful. So we have a question from Brahm, and he's asking how you're seeing CEOs, and naturally, I'm sure you're in a place where hopefully you're getting some of that vulnerability and some of that realness from people that they wouldn't necessarily share otherwise. I'm just curious how you're seeing CEOs and senior executives' perspectives or concerns change as a function of COVID, and if there's been any kind of notable changes in the way that people have been either seeing the world or also responding to it.
Yeah, I think there's a great humility that's coming into this COVID world. And I think we all dislike immensely where we are. It's such a restriction on our lives, a restriction on connections with people. But when everyone's on a screen with a lamp in the background, and you know, it's varying colors of lamps, varying pictures of our walls and our studies or wherever it may be, that's humility right there. And there's no ivory tower. And I think that's humanizing a lot of leaders. I think a lot of leaders are also being pushed into this wild world of having to think about things they've never had to think about before. Think about childcare for their employees. Think about how people set up at home. Think about challenges. That's over and above all the business challenges that are real and obviously an enormous sense of urgency, as we heard from Nouriel earlier. They're faced with all these questions, and many of them have never been answered before. There's no roadmap. There's no playbook. They're having to collaborate to figure it out. It's impossible for them to carry it on their own shoulders, and I think that's forcing people through this openness or this humility to ask and engage with people, and to realize that no one person has all the answers here. How do you find collaboration? If you get the collaboration piece wrong, you're going to have an impact on motivation, and that's going to impact people because they're working from home. People are taking things more personally, I think, now, because they're with their families. They want to feel a sense of safety as much as that can be the case. They want to have a sense of belonging. It's virtual, so you cannot do that physically. You cannot organize a party or an event and where people get together real time. So you have to organize that virtually. So there's much more thoughtfulness, I think, that COVID has opened up. Again, right now, I think we're all just in the middle of it, and we're all wishing we were at the other end of it. But I do say to people, make notes on what you're going through right now, because in 9 months or a year, whenever we come out of this, if all goes well and we get a vaccine, what we've experienced will, in many respects, is mirrors onto ourselves. And we are looking ourselves in the mirror, and we will find pictures of ourselves that we never knew were there. We'll find experiences and feelings and emotions that we never were there. We'll find an ability to motivate and influence people that we didn't know were that important. And the question is, how can we dig again? How can we capture those? How do we own those? Building into that piece of authenticity. There's a power in harnessing COVID for the betterment of our colleagues, for the betterment of society, for our individual growth. It's scary, but through scariness, there's a wisdom that's coming through this. So that's what I would advise everyone I'm speaking to. Own it, get curious. What's in it? What's coming through you? What's coming out of this through you that you want to hold on to and you want to keep. So in a way, it's everyone's Everest, right? COVID.
Thank you so much, Vivian. And also thank you, Dr. Roubini. I'm noting that the time is just past 8, so I'm going to hand this over to Andreas to decide where to sort of spend the additional time if people can stick around. Andreas.
Thank you very much, Neil, of course. Thank you, Mr. Rigney as well, and Kayellen. I think we're gonna have some wrap-up remarks from the president, and that will guide us into the evening. President Gerard, would you like to make any final statements, any additional comments?
Very, very briefly, I want to thank everyone who participated tonight. It was fascinating. Vivian, I'd rather actually, if we were able to go down the road to the Guinness Brewery and spend the rest of the evening talking about things.
Me too.
But thank you both, Dr. Roubini. I really appreciate the time you spent with us, and everyone who's participated tonight. We are going to continue with these every week with Rotary. This is the beginning of a whole new program for Rotary Club of New York. And I guess part of the reason is because we're being forced to do this by the COVID-19. And sometimes, again, Vivian, logging to something you've reminded us, sometimes what seems like a negative can actually be a great opportunity to do something unusual, to delve into ourselves and find answers that we always need. In one positive note, I will add that yesterday, World Health Organization and UNICEF announced through Rotary International that a project that we had all been involved in for many years, the eradication of polio, was finally accomplished in Western Africa, and Nigeria declared that polio has now been eradicated. And this is something we've worked on, and it just shows when you put your mind to something, it can be done. So with that, Andreas, thank you everyone for participating tonight. See you all next week. Andreas.
Before we close up, apologies, can I have a second? So I just want to make one correction. For this youth empowerment session will happen every month, last week of every month, and Wednesday, 7 to 8 p.m. Eastern time. We do have within the Rotary every week, weekly meetings. So all of you are welcome to join. It's on Zoom. So yeah, we look forward to seeing you in the next month. It's September 30th. Stay tuned. I highly appreciate Dr. Roubini and Vivian, Neil, and Kylan for your time and input for this, our very first event. And I look forward to seeing you in the next events. Thank you so much.
Thank you.
Thank you, Bullard. Those remarks should just about wrap it up. Also, a special thank you to you, Bullard, for putting this so wonderfully together with all your efforts, and has been a great meeting. Thank you all for joining, and have a pleasant evening still. Thank you.
Thank you so much.
Thank you. Bye-bye.